Hi, I'm Mayor Craig Greenberg, and Neal and I love living in Louisville, Kentucky.
Hey guys, Neal Cox with Judah Real Estate Group right here in Louisville, Kentucky. I'm here with Mike Creeden from Pinnacle Mortgage. He is going to talk to us today about what it's like to get approved for a mortgage when you're changing jobs or moving areas or work from home or different situations like that. We recently ran into an issue where we had a client in common and they were going to go from a W-2 job. When they moved, they were going to stay on the same place and go 1099. And Mike was able to actually pause that for them, say, hey, hold on, that's going to cause a problem. So what kind of things do people need to think about when they're moving to a new city and transferring jobs and things like that?
First, thanks for having me, Neal. Appreciate it. Just the pre-approval process is a little bit different when you're moving from one area to another. And the reason being is just kind of common sense, right? Like from an underwriting perspective, they need to make sure that income on the application is going to continue if you're moving from one state to another. The guidelines are a little bit different than, somebody already living in Louisville purchasing another home in Louisville. It's going to be different as compared to somebody moving from California to Louisville in this instance. In the particular instance that we had with the client, that particular employer was, willing to retain them as an employee. However, they wanted to convert them from a W-2 employee to a 1099 employee. The reason why that presents issues is that when you're a 1099 employee, you're technically self-employed. Mm-hmm. And the guidelines for a self-employed borrower are completely different. So typically lenders will want to see at least a 2-year history of self-employment before they can count any of that income. There are some exceptions. In this particular case, it probably would have been a 1-year waiting period if you're actually becoming self-employed and you're in the same type of business that you were as a W-2 employee. Typically, there's only a 12-month waiting period.
Okay.
In that particular case, we were able to kind of give the client advice, which kind of solved the issue. She was able to work it out with the employer to kind of wait to make that transition in terms of the type of employee until after closing.
Yeah. And then what about people that work from home? Are they able to just pick up and I work from home in Seattle and now I work from home in Louisville?
Yeah. So people who are remote employees, then, that's not an issue. And that's one thing that I kind of tell my clients is, we don't necessarily have to prove that on day one, but that is a question that the underwriter will ask once they're under contract and once the file is actually sent to an underwriter. So they're going to want proof that they're able to work remotely. So it can be as simple as having, their manager or somebody in the HR department send me an email that just states that, Mr. Smith is able to work remotely and the move to Kentucky is not going to impact, their employment or their income.
Gotcha. Because generally an underwriter wants to see a 2-year history of adequate income, I guess. And then when you're changing something, they want to be reasonably sure that that's not going to be interrupted. That's
correct. So from the mortgage guideline perspective, it's called continuity of income. So again, they just want to make sure that there's not going to be any issues with the income, once somebody moves to the Louisville market. Right.
And then what about the self-employed issue? I'm self-employed. I believe you're self-employed. Mm-hmm. What do you have to look out for there? As some people know, you can kind of fudge the numbers on self-employment I made this much and I'm giving the government this much. But whatever you're paying taxes on and giving the government to, I think that's kind of what they base it on usually.
Exactly. So it's kind of a catch-22 as somebody who is self-employed, you likely want to write off as many deductions as possible so that you pay the government the least amount of taxes as possible. From a mortgage standpoint, that's not necessarily the greatest thing because lenders are going to look at your basically your net income after all of your deductions as a basis for mortgage qualification. And so, that number might be less than, what you truly make. And that can potentially, cause issues in terms of getting approved for a mortgage. So if you are self-employed, it's even more important, I think, to go through the pre-approval process before you make an offer on a house, just because the income calculation is not straightforward. If somebody makes $100,000 a year and they're on salary, that's pretty easy math in terms of how the underwriter is going to treat your income.
Right.
When you're self-employed, it's completely different. So somebody might think they make a lot of money, but after those deductions, it might not look as good on paper. And so there are some challenges with being self-employed and getting approved for a mortgage. I'm not saying it's not possible. It's just more of a complex income calculation. And so it's certainly important to definitely speak to a lender prior to looking at homes when you are self-employed.
Gotcha. I know my wife is a W-2 employee and I'm self-employed. Our mortgage is in her name because of that. At the time, it was it would have hurt us to put me on there, even though I actually was making money.
Funny enough, I actually purchased a house right after I started my own company, and so my brother co-signed for me, and it was kind of ironic and funny that I owned a mortgage company, but yet I could not get approved for a mortgage, even though that my income was good. I just didn't have a long enough history of being self-employed at that time to get approved.
Huh. Well, sometimes you get people saying, can you be a realtor and not own a home?
Yeah.
So same kind of thing.
Yeah.
Well, I think the upshot is if you're moving to the area, reach out. We got contact information down below. If you like this information, subscribe, hit the little bell to be notified. And if you're really thinking about moving, before you're picking up and packing up a U-Haul, reach out and just talk to me. I'll set you up with Mike. I'll set you up with someone else if you want that can be very helpful. Mike does a fantastic job with all of my clients. So let's reach out. Stuff's down there. You can call, email, text, or of course, sound the bugle. So we're going to get off to the races to make your move to Louisville a winning one.
The other thing that I wanted to add is that it's actually possible to get approved for a mortgage when you're moving from one, area of the country to another without actually having to start that new job yet. So it's possible to get approved based upon a non-contingent job offer. And what I mean by non-contingent is that it can't, the job and the employment offer can't be contingent upon a drug test or a background check. It needs to be a non-contingent job offer. And as long as you're going to start that job within 90 days of closing, we can actually use that employment offer as qualifying income towards the purchase.
That's huge.
That is definitely huge. With that being said, it is possible that, after closing, the lender will request your first pay stub to, confirm that you actually did start that job. But that's one thing that most individuals aren't aware of when making a move, that you don't even necessarily have to start your job before you can get approved.
Okay, that's actually very helpful to know, because we get people changing jobs. I talk to people who are transferring jobs a lot of times, and a lot of times their spouse needs to transfer their job to something new. So that's very good info as well.
Yeah.
For Mike Creeden and Neal Cox, we'll see you next time.
Thanks.